All right. Good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you guys today for the snapshot. So today we are going to start by going through the calendar, the economic calendar, to get a feel of what events we have today, and then we shall just go through some of the different fundamental news that has been affecting the market since the week began. So to start it off, I want us to focus on the calendar for today, which is right before us here. So this calendar is showing us some news that we have gotten out from Japan. We got some CPI coming out from Japan today. Early this morning, we saw that actually the national core CPI increased from 2.2% to 2.5%. We've also seen a pickup also on the manufacturing PMI for Japan, rather a slight decline from 50.4 to 50.1. Then we also got a resurgence on retail sales for the UK, coming in from negative territory, negative 2.5% to 1.2%. And of course, also the core retail sales increasing from negative 1.4%, picking up to 2.9%. Um, Going into Eurozone, we had some data coming out from Germany, which are PMIs, services and manufacturing. We saw actually a nice pick up there, rather decline on the PMIs, again indicating that reinforcing that narrative of the slowdown that we have been seeing for a number of the European countries. Now, going over to generally how the week has been, we've had a relatively risk-on week on the indices, especially, and I know when we say risk on sentiment is still there, it's still there mostly on the stocks and on the indices. But when you cross over to the risk on currencies like Euro USD, GBP USD, others like AUD USD, a number of them seem to be on a steady downtrend. So we are seeing that this is how we might close the week, with a bit of a sell, but it's likely we have to wait for the US session to then see whether this continues. If the US session shows us a bit of hesitation for continuous selling momentum, then we see a pickup there. Now, let's cross over to the DXY to see generally how the DXY has been doing. So now looking at the DXY is on a steady uptrend. I'm sure most of you are aware that the DXY has been looking pretty bullish from December. We've been seeing it on a steady uptrend. Now, I know someone brought up correlation the last time we had the snapshot, but when you're looking at correlation, it's important to look at the degree of correlation. So I know that the dollar is negatively correlated with things like euro and the pound, but you find that it's not 100%. That's why even then, when you look at how the pound has been doing from December or from January, you notice that it has been on an uptrend. So it's also funny to see that the DXY has also been on an uptrend. Now, this steady move higher on the dollar index, I believe, is one of the reasons why we are seeing some bit of selling coming in for the pound, and also selling coming in for the euro as of this morning. However, when you cross over to the MT5, you'll also be able to see that a number of those assets are actually in downtrends, and again, it's reinforcing that move that we are seeing some selling there. Now, crossing over to gold, again, we shall see gold more on the MT5. I won't go over gold from here, but for the DXY, we are seeing actually the DXY is advancing today. Without a doubt, I think we should see more upside momentum for the DXY. If we take out this level of 106, then it's likely that the dollar is going to keep moving higher, and we might enter into this zone, which is I believe a much higher premium zone for the dollar, upwards of 110. Now, I'm going over to the indices for those of you that trade indices. Okay, awesome. For those of you that trade indices, typically this is what we've been seeing. The semiconductors have been the reason where we are seeing a lot of move higher for the indices, most especially the Nasdaq. Now, a number of those companies, there are quite many, but the most important ones that we typically tend to look at is Nvidia, okay? But there are also others like Broadcom, which is also due for a stock split. Broadcom has also been on a very strong move to the upside, as you can see here, that Nvidia is up 164% since the start of the year. Broadcom is up 55%, AMD is up 9%, Qualcomm, and the list goes on. So one of the reasons why S&P 500 and Nasdaq have been rallying has been because of some of these semiconductor companies. Now, that of course does not mean that the other stocks are not doing well, but the bigger part of the move is actually because of these. So Nasdaq yesterday was actually able to reach as high as 20,000. I wasn't with you guys on the snapshot yesterday. I was with Rufus, but you must have noticed how high Nasdaq went, and that was because of this continuous move to the upside. So this rally on the semiconductors is likely to continue, and it's likely that we might see an even bigger push to the upside over time. Now, yesterday we had the Bank of England rate decision, and I just want to quickly go through some of the key things that we saw from their policy statement that they released. Now, the Bank of England did not do any rate cuts yesterday. They have been providing relatively vague guidance regarding the rate cuts. The last time they met in May, they mentioned that they were going to look into cutting rates, possibly cutting rates again, vague guidance in June, which they didn't do. Now, when you look at the data that has been coming out for the UK, specifically for England, we are seeing that inflation has been declining. The 12-month CPI inflation fell to 2%, which of course is their target. However, if this inflation keeps reducing, then it might go below their target, and they might have to now come over and cut. Okay. Now, one of the fears that they have is also that inflation is going to resurge, and I think if inflation moves higher, the reason why the Fed and the reason why the Bank of England are not acting on rate cuts is because they fear that inflation will turn around and move higher. Okay. Now, if inflation turns around and moves higher, then they have to now move from rate cuts and start hiking. Okay. So they don't want to make that mistake, and I think that's why they are delaying cutting the rates. But we're already seeing that slow down in some of with some of the data we have been seeing with the UK. And it's also one of the reasons why I suspect the pound is also taking a hit this morning because of a revision of those targets that inflation is going to continue to decline. So just going through a few things here. We can see here that the MPC remains prepared to adjust monetary policy as warranted by economic data to return inflation to the 2% target sustainably. It will therefore continue to monitor closely indications of persistent inflationary pressures and resilience in the economy. They're also saying here, as part of the August forecast, members of the committee consider all of the information available and how this affects the assessment. Yeah. So the move yesterday, after them cutting the rates, we saw a sell on the pound, and the pound, even as of today morning, is still selling. We are seeing it actually dropping, actually below 1.26400. I don't know why it is now, but we'll be able to see when we cross over to the charts. Now, Broadcom, for those of you that are interested in some of the stocks that have actually been pushing higher, this is one of them. Broadcom is a semiconductor company. It's under Nasdaq, and it's actually supposed to have a rate cut very soon. Keep in mind that you guys can access these stocks on FX Spacer's platform. It's important to keep an eye, especially on Broadcom and Nvidia, because they are typically doing well this year. So when they cut this stock, it's going to come down to a price of about $170 one share. And so if you go and you buy you buy it on FX Spacer's you buy it on FX Spacer's MT5 using the Premier account, then you'll be in a good position to get it at a good price for it to move higher. Nvidia had a stock split. They split it to $120 a share, and now it is trading at around $130 a share, and it's showing signs that it could possibly move higher. Awesome. Now, for gold traders, I just need us to also quickly look at the COT report before we cross over to the MT5. The COT report right now, this is how it's standing. Okay. When you look at the the current positions for the producers, excuse me, we are seeing that the producers currently are holding 56,729 short positions on gold. Swap dealers are holding 275,178 positions on gold for a short. Then managed money is holding 168,424,000 positions, long positions on gold. But these again, managed money does not switch sides too often. For them, they are usually in for the long haul. I suspect that's why their positions are much higher here. Now, for the other reportables, we are seeing that actually other reportables where uh, the retail traders fall or the leveraged funds actually currently have a much bigger position for the long, okay, on gold. So this will show you then that actually gold is likely to have further gains. And I suspect also the reason why we have been seeing how gold has been having hesitation with selling, okay. I'm sure you guys must have seen that because we covered that on the charts. Okay, so let's cross over to the charts and see what's happening over there. I haven't updated some of the assets simply because a number of them have not really had that much of a change with price action. Dow Jones has surprised, and we have seen how Dow Jones is actually able to break out of that box. If you notice, I had drawn that box there for a reason. I said that the barrier for Dow Jones was at 39,000. So yesterday, after having a relatively nice day, some of the stocks in the index did well, like Salesforce. A lot of the consumer staples stocks did well. The Salesforce, stocks like Coca-Cola, Nike, and some of also the financials like the banks pushed Dow Jones higher. And finally, after such a long wait, we are now above 39,000, and we have maintained price action above that area there very nicely. So I think now we have to wait for the US session to see just how well the Dow Jones can fare at that area there. Um, if we maintain price action around there, then it's likely that we are going to aim for higher levels. Looking at the three indices for the US, Dow Jones is the one that is lagging. S&P 500 is at an all-time high. Nasdaq is a few points from its all-time high that it was at just yesterday, and Dow Jones is down about 900 points from its all-time high at 40,000. Okay, so it still has a lot of potential to move higher. If we take out this area here and possibly take out 39,200, then we are likely to move even as high as 39,400 today. So we just have to keep an eye there and see what happens. Now, crossing over to the Nasdaq. Yesterday, the Nasdaq seemed to have temporary resistance around this area here. I'm not yet too certain whether this is a major resistance area for the Nasdaq, but for now, it seems to have topped, okay, around 20,000 there. And the reason why we saw Nasdaq selling yesterday was because it was not supported by its stocks, by some stocks like Nvidia. Yesterday, Nvidia was down about 4%. Apple also was down about 2%, and that had a big lag on the Nasdaq. So we just have to wait and see how they fare today. What I would do for Nasdaq trading today is I would add my fib levels here and possibly put my 0% fib level around here, which I believe is my next swing low for the Nasdaq. Now, if we take out this area here, rather if we bounce off this area, then I think we should then look for buys for the Nasdaq and possibly move higher. Yesterday, I actually personally traded the Nasdaq. I opened up trades on the Nasdaq on my M15, and I was actually very, very happy with the trades I did. So yesterday, we seem to have found some bit of support around this area for the Nasdaq, as you can see, and it's at this area that I looked for buys. Okay, so we need to see essentially how we fare around this area. If we take out this zone, then we are going to see more selling coming in. But how the Nasdaq does today is majorly going to depend on how the stocks do. If Apple does not have any bullish momentum today, then I believe the Nasdaq could sustain further losses. Remember, it's been on a tear, it's been moving up quite strongly from all these areas here. So the least it can do is just pull back a bit and then continue its swing to the upside. Now, Crossing over to GBP/USD. So GBP/USD, from the last time we met, I have not changed my analysis. You can just, if you think maybe I'm coming up with this stuff, you can actually check my snapshot for Wednesday. It's available on YouTube. We're looking for a sell for GBP/USD, and we're looking for sell limits around this area here. Okay. The reason for my thoughts on GBP/USD was because it created a bearish flag. Okay. So bearish flags typically tend to form when the market is having a bit of downtrend, and we typically tend to look for a sell whenever we have these flags forming. So GBPUSD had a formation of that bearish flag, and it seemed to have not sustained price action, and we saw it selling. Now, when you look at the calendar, you'll notice that we had retail sales data today, and the retail sales data pointed towards you know the retail sales data we should have been buying based on the retail sales data. The data came in higher for the pound, and typically whenever retail sales, inflation, and also the central bank rate comes in high, we normally are supposed to look for a sell for that, a buy for that currency. So the move higher for the pound was very, very limited. As you can see, this was the candle from the news at 9, and right after we got the news, we saw a very sharp move to the upside of about 15 pips, and soon after that the pound continued selling. Okay, now whenever you have news, guys, remember that news fades away and the market will move according to its original trend. So GBPUSD, currently when I look at it, it seems to be having a bit of a support around this area here. It seems to have bought off that area, but it still has a lot of hesitation to buy. So we might see it selling again later today, and possibly moving even lower to that area of 1.26380. So for me, I'm looking towards a sell for GBPUSD. Now crossing over to Euro USD, Euro USD, I wasn't done with this chart here, but I can just add my lines there for to see essentially what we're having with it. So uh, let me just go back to the time when we had the CPI. That was last week, I believe. I think CPI was last week, if I'm not mistaken. Yeah, it was last week. So this is how Euro USD has been trending. Okay, we had a bit of a sell. Okay, here. Now this blue candle which you guys are seeing here, let me just point at it. That blue candle that you're seeing there is the CPI candle for US CPI. The US CPI came in lower, and soon after that we saw Euro USD spiking up, a spike of about 100 pips, but you notice that we were unable to maintain price action above our 50% fib level. Okay, this again is my discount zone on my H4 around this area here. If we maintain price action above 1.08, we are looking for buys. If we break below it, we are looking for sells. Okay, now you notice that after this swing high that we took after CPI, we failed to break above, we failed to maintain price action above our 50% fib. So we're supposed to be looking for sales. Now, if you come to this end of your chart on the Euro USD, you notice that Euro USD's swing to the upside, topped around this area here, okay, which is around 1.09. Okay, so it topped around here, and soon after topping there, it created a lower high, and then it started downtrend. Okay, so right now, much as we are off our lows from April, we are in a steady downtrend on Euro USD. Okay, so we should ideally be looking for sales closer to our areas there. We should be looking for sales along our 50-day moving average. Okay, if I add my channel here for you guys, I can just do this here. If I were to add my channel, just a moment, let me just add it. So if I were to add my channel here, you'll be able to see the kind of trend we had on Euro USD. Okay, it's been a steady downtrend with lower lows. Now, if I look at my moving averages also, we had a crossover around this area soon after we broke below that 50% fib level. Okay, we had a death cross. So the death cross is a sign that Euro USD was going to go into a lot of bullish, rather bearish momentum. Okay, so now how do we approach trading today? Okay, now for Euro USD today, again guys, I'll mention that today is a Friday, so typically sometimes the market has slow volumes, but the bias is a sell, so you might want to set your sell limit closer to that ratio, that golden ratio there. I think it's around 1.1.07223. Okay, so if I were to add new fib levels, this is ideally my swing high. Okay, remember when you're adding the fibs, you add them on the recent high, swing high, and then you add them to the recent swing low, which is here. Okay, so ideally you can see that for us to look for a buy, we need to first have a break above 50. So what I'll do is that I'll have to look for a sell limit closer to my 61.8% on my regional fib, which is here. If we get a test or a break above, then we can look for a potential sell limit there, and then we can now take it all the way down. Okay, I don't expect USD to buy too much, and as of today, in case it tries to buy too much, then your sell limit should be here. But otherwise, aside from that, we are looking for sales. Now, gold. So this is the latest we had on gold. When we met on Wednesday, I had an asymmetrical triangle here on gold. Asymmetrical triangles typically tend to form when the market is is consolidating, okay, as it waits for a potential breakout, okay. So gold, since the 7th of June, it kept ranging in a certain area, okay. But as it kept ranging, it kept collecting its price action ready for a breakout. So we got a breakout on gold, and this breakout is what took it all the way to where it is right now. Now, if you guys recall, I earlier spoke about the COT report that showed you that the gold long positions are actually having a large bearing on gold's price action. Every single time gold has been trying to sell, especially below that demand zone, okay, the multi-day demand zone there, we've somehow failed to have gold selling below it all the way from April. We tried selling in April, we bought. We tried selling in May, we bought. We tried selling again around 10th June, and we bought. Now, it's along that time when we tried selling on 10th June that gold entered into that asymmetrical trend, and then soon it began buying to the upside. Now, I expect gold to continue in an upside momentum, and I know this will come very as something that will be strange for some of us, because we've been made to believe that whenever dollar is buying, we should be selling gold, which I find that quite odd, because if you look at the price action today and also this week, the dollar has been moving higher, but gold has also been moving higher. Okay, so it's a bit tricky to explain, but what we can do is focus on the price action. The price action for gold is very strong uptrend. Okay, you can just look, if you're a price action trader, I think this should make sense. We've been having gold breaking through you know structures. As you can see here, we had a FVG here on gold. It sold, came, picked up this liquidity, bought again. We also had the same thing here. We saw gold selling, came here, bought again. So gold has been strong bullish, and I suspect that this is going to continue. Uh, Now, where could gold possibly continue to? That's a big question. Okay, so if you're buying it, where could it likely continue to? If you go on your H4 time frame, the main barrier for gold is actually 2,388. Okay, if you guys recall, this time when we had gold selling, that was after we saw some news coming out from China that they had halted an 18-month buying spree for gold. Okay, now we thought that was going to be the end of gold, but then that didn't stop gold from starting a fresh uptrend. Okay, and at the moment I think gold is aiming for this level here. Okay, and it could even be able to achieve that sometime even today, or maybe later next week. Now, the other thing is, I've also been trying to check on the VIX, which I typically tend to monitor whenever it's likely, maybe we are likely to get some kind of risk event. VIX actually was able to break out of my descending channel here, okay, as you can see it. So I've been revising my trend lines here, but as you can see, we broke out of VIX here. So VIX is the fear index, okay, and it typically shows us how the market sentiment is doing, okay. So a lot of traders were wondering, how is it that the the um, the fear and greed index on CNN is telling us that we are in a lot of fear. But then when you come and look at the VIX, VIX is not showing signs of fear, right? Now, if there's any possibility of a risk event, I think gold is telling us something. Gold rarely buys too much whenever you have the dollar being so strong. And whenever it does that, it's sometimes telling us that the traders and investors are trying to price in a potential risk event. Okay. If you see how gold has been trading whenever we have like a war or like some tensions, it starts to rally before like the tensions intensify. Okay, so maybe by the time the tensions intensify, gold most likely will be trading much higher. Okay, awesome. That's it from me. If you have any questions, guys, now may be the time to ask your questions. Okay. Paul Kamau, you're asking what is the market sentiment and how is it influencing trading behavior today? Paul Kamau, uh, awesome. Paul Kamau, I thank you so much for that question. That's I believe a very important question, which makes it easier even for the rest of us who are trying to find out how the market is doing. So I would say market sentiment is let me start. I'll separate it to different markets. So when you look at the currencies, the sentiment is generally looking risk off. For the risk on currencies, GBPUSD is looking a sell. We are seeing some selling momentum there. Euro USD definitely sell. We are seeing a bit of selling there. Gold again, because of a bit of fear that might be there, gold is pricing it in. We are seeing a buy for gold. Crossing over to Team US. Before I forget, actually, Paul, you've reminded me. Now, on Wednesday, we're looking for a buy on USD Remember, USD we set the setup for a buy. Okay, you can just refer to the snapshot we had on Wednesday. We say that in case the Swiss National Bank cuts its rates, then we look for a buy. So they cut the rate, and now you can see. So I'm bullish on USD. So Team US typically, okay, buy. Uh, Other risk on currencies like the pound, all those ones, we're looking for sales on them. Now, crossing over to the stock market. Stock market, the sentiment is greed, okay, for now. So we're looking for buys on Dow Jones, Nasdaq, and also even D40. Okay, D40 is having a bit of selling though at the moment. Okay, but we need to see just how intense that is. In case it's too intense, then it's likely that we might switch from greed to fear. Awesome. FVG is a fair value gap. Okay. So typically we tend to have them forming whenever we have a break and retest. Okay. So gold had break and retest, and it had those gaps being filled. Okay. Whenever it would break higher, it had an FVG created. So the FVG is filled before it moves higher. So the FVG is similar to the breakout and retest. You have a breakout, price comes back, picks up that liquidity, and then continues moving higher. Okay. Awesome. What trade did you take today, depending on the market sentiments? For me today, first of all, I would be focusing on the US session because I trade indices. So I would wait for how the US market fares at open. Okay, if I see hesitation to break certain levels, then I would then switch over to a sell. I have my eyes on Dow Jones especially. I'm waiting to see just how Dow Jones fares. Now, before I forget, today we have an event called quad witching. So quad witching is where you have expiries for the stock index options, futures, single stock futures, as well as also the single stock index. Now, that quad witching typically tends to have a very big volatility. That's only for those of you that trade indices. Now, if we see a lot of expiries today and we see a lot of flow for selling, then I think the Dow Jones is going to continue to sell, and we should possibly see it moving down. So for me, my eyes are on the Dow Jones, but majorly to see how it does after at open. So for now, it's wait and see. At open, then we decide. Mike, you're saying, do you think gold will retrace to 2,343? Let me just see gold. So gold already had its move lower for London session. Okay. Typically, we tend to see a pullback around London in case it creates a high around Asia. It's what we had yesterday. So the London pullback has already happened. The retracement gold gave you was to 2,355. So the new retracement is unlikely to happen. The next time it can happen is only at open for US. US, we shall then get a new retracement, possibly maybe somewhere here. So you might want to have your buy limits around this area, and then you have price moving up. Okay. So you need to time. If you're looking for retracements, you always need to time, guys. Don't get late for retracements. The retracements will always form around London, and then we see a push higher. All right. Now, I just want to talk about the FX Pesa Academy video series that we have on YouTube. Those videos are available for you on our YouTube channel. So if you want to watch those videos, you can just simply go to FX Pesa's YouTube, and you will find the video under FX Pesa Academy. And there's a new video that has just been posted. There's a link to in the description below, so you can check out the link and go to that video. The video that has been posted today is on understanding market sentiment. Okay, so watch that video, guys, so that you can be able to learn more about how to trade. That's it from me. Again, thank you so much, guys, for joining me for today's market snapshot. I wish you guys all the best. Cheers, happy trading, and all the best. Okay, Paul, you're saying, how do you confirm validity of a breakout before entering a trade? Um, there are many ways you can confirm the validity. First thing is to, for instance, if maybe I have my symmetrical triangle, okay, I'm ideally looking for the size of the breakout in terms of its candlestick. I typically will look for buys whenever I get a full body candle at a breakout. Okay, like for instance, when you come and go on the H4 time frame, we've been having a lot of times where we have breakouts with full body candles. Okay, now this is gold, for instance. Let me bring your price action down here for gold where we were having ranging. Okay. So when you have full body candles, whenever you have the breakouts, that's a sign of strong demand. And whenever you have strong demand, it's a sign that you can actually go with that breakout. Now, if I'm to add my symmetrical triangle on my H4, which I had on my H4, let me just add it here for you. Okay. So this is my H4 time frame, and you can see that we had a full body candle when gold broke out of that asymmetrical triangle. Okay, so this is a sign of demand. So typically, what you do is draw your pattern. Okay, draw your pattern. It can be a box, it can be a symmetrical triangle, it can even be a condescending wedge. For me, I like wedges a lot. So for instance, I like to use wedges a lot on my charts. Uh, Something like this. Okay, I can just draw for you this wedge. So if I get a breakout with a full body, that's typically a sign of strong momentum. Okay, uh, if you see a lot of wicks, like for instance, if you see a breakout where the wick is is very long to the upside, and it's a breakout for a buy, that means that the supply is still strong and the market could reverse. Okay, right? I hope that helps. So you need to look at the size of the candles, and the same also applies even on the lower time frames. Then have to be even the big time frames, even the lower time frames. Now, let me just give you this example, Paul. Let's cross over to US 30 yesterday. US 30 yesterday on the M15. Let me take you to the M15. This is how the M15 candles look like for US 30. We had a nice breakout out of a range on the M15, a range that we were in for a very, very long time. Okay. Now, this range is right here. Okay. We're in this range, but look at the size of the breakout we had yesterday at open. Okay, you can see we had the first candle here, full body candle, a sign of demand. We had another full body candle. Yes, there was a bit of a sweep to the downside, but look at how the price continued. Okay, this is already a sign of demand. And typically, even when you have a small pullback or a retracement, because there was initial demand here, it will show you that the price is likely to move higher. Okay, so for me, I focus more on, I'm a momentum trader, so I'll look at the momentum. The momentum will always tell me where the side of the trade is, whether it's on a buy, whether it's on a sell. Okay, and that's it, guys. I wish you all happy trading, and cheers. We meet then next week. Nice weekend, guys.